What is up, Bitcoiners? It is CK, and I'm here with an absolutely fantastic podcast. I had the absolute pleasure of sitting across from Fang, the CEO of OKCoin, and we just talked Bitcoin. Hong really understands the fundamental issues that Bitcoin is here to solve, and she has a very good understanding of how and why Bitcoin is the ideal way to solve it. She has, after taking leadership at OKCoin, in my opinion, done an absolutely fantastic job of leading the organization, of aligning the organization as much as possible with Bitcoin. And it is just an absolute blast getting to hear her riff and talk about Bitcoin, explain why it's important, explain what is wrong with the current system and why Bitcoin, quote unquote, fixes this. I think you guys are going to absolutely love this conversation. But before we get into it, I want to tell you about the Bitcoin 2021 conference. You guys, Bitcoin 2021 is the hottest event of this year. It is going to be absolutely jam-packed with the movers and shakers of the Bitcoin space. We have Michael Saylor, we have Jack Dorsey, we have Nick Szabo, we have Tony Hawk, who, little do you know, he's been riding this Bitcoin wave since 2016. And y'all, it doesn't end there. I mean, Mayor Suarez from Miami, the great political leader who is really pushing the envelope on freedom as well as Bitcoin adoption in government. This is just the tip of the iceberg. Things are just getting started. We are less than 90 days away, and this event's going to sell out, and we are going to be announcing a lot of awesome speakers. So do not wait. Make sure that you're in Miami June 3rd, 4th, and 5th, and make sure to get your tickets today at b.tc/conference. And guess what? Because you're listening to the Bitcoin Magazine podcast, you get 10% off if you use code Satoshi. So don't leave those sats on the table. Make sure you use code Satoshi. Save yourself 10% off. And yeah, guys, Bitcoin 2021. You're not going to want to miss this one. All right, that's enough from me. Let's get into this fantastic conversation with Hong Fang. Bitcoiners, I am sitting across screen from Hong Fang, the CEO of OKCoin. Hong and I have gotten to know each other over the past month or so, and we just had a really awesome conversation on Clubhouse last night about OKCoin and a lot of the different changes that they're making to the product and why. I was really impressed by that conversation, Hong, in particular. A lot of the things that you were saying really validated, my view on the Bitcoin space. Truthfully, I have to say, I've been really impressed with what you've been doing at OKCoin as well. But I guess I just wanted to get started by saying, where were you when you discovered Bitcoin? Because what were you doing? What kind of set you up to understand it? Because, I just listening to you last night, I feel like you really do align with, the ethos of Bitcoin and you really understand it.
Yeah. So I actually spent 8 years on Wall Street on the investment banking side. I work with Goldman, and I was actually in financial institutions group. So the center of the legacy system, if you will. And then after 8 years, I joined Goldman in 2008, right around that chaotic period when white paper was created, on the heel of which the white paper was created. And then after Goldman, I did growth investment for 3 years. And that was actually when I got into Bitcoin. In 2016, I got to know Star, who founded OKCoin, and I got to know about OKCoin back then. And I started to look into it. Obviously, the platform was doing great, and obviously the business was doing great. It was the biggest platform in China doing crypto trading against Chinese yuan. But from a business investment perspective, I was hoping to understand what's really driving it. Is it just speculation, or is there something deeper there? And ultimately I made the decision of investing because I think there's something deeper, just more than speculation. That's kind of what's going on. So, I think, and Christian, thank you for inviting me yesterday to the Clubhouse conversation. I think it's, it's great to listen to other people's point of view and kind of share what we are thinking. I think when we think about, Bitcoin versus the current system, I had a conversation with Michael Saylor a while ago. Invited him over for fireside chat, and I was asking him when he was sitting in the boardroom trying to convince his board members and CFOs about making Bitcoin investment using his treasury money, what was the biggest challenge that he was facing? And I think what he said echoed with me a lot, which is that the challenge was really educating people, changing their mental framework. That was the biggest hurdle that one have to actually cross to be able to see what actually Bitcoin is. Because I think that is, in our educational and professional background, at least in my case, I think there's always this assumption that we operate in the free markets. But even in that free markets, that monetary policy, we studied macroeconomics in school, right? When finance, I went to Chicago Business School, and that was a school where there are a lot of Nobel winners in economics, and people talk about free markets. Chicago is a big believer in free markets, but even in that domain, when it comes to macroeconomics classes, professors talking about that, nobody ever questioned about central government using monetary policy and fiscal policy to moderate the economy and direct the economy and just the economy to the direction that officials want them to go, economics want them to go. That was a huge assumption, but nobody questioned about that. And I actually heard about Bitcoin in 2013 when I was still at Goldman. And I heard from a senior banker, a female banker actually, who was super excited. We were having a meeting about a deal, and she was just super excited. Just randomly brought up Bitcoin and said, "This is a cool thing that the price just got up." Took a look, and I was just too dumb. I didn't pay attention. But even if I did, I probably wouldn't be able to understand it without really overturning the previous assumption that money doesn't have to be controlled by central banks, and it shouldn't be. And we should question why in a free market, money, which is the real foundation of everything, is centrally planned. And to be honest, when I was at Goldman, in 2008, that was the worst year ever that you can actually got into investment banking, because that was the year where everything tumbled down. Everything tumbled down around us. And I was sitting at my desk seeing a lot of my quote unquote classmates got moved around, and a lot of the companies are being affected. And banks are trying to raise money from investors and from the government, right? TARP, T-A-R-P, I don't know if you're aware of that, still remember that. But there was huge money injected by the central bank and the fiscal policy to try to save the too big to fail institutions. And, I did smell things or were not wrong, right? Because, in my experience at Goldman, there was a lot of deals happening, and you see how people are kind of using that financial system, do a lot of financial engineering, but ultimately fundamental matters. But even that fundamental doesn't seem right, because the price signals seems that the government, when government put a lot of money into it, doesn't really serve the purpose of reinventing the economy. It didn't go to the place where it should be going, and just the asset bubble just keep blowing up. And the reason that we had 2008 problem was because of the money printing back in 2000 with Greenspan. So things didn't smell right to me, but not until I actually dug into Bitcoin in 2016, then I realized, oh, actually, what I've learned all the time, what I have believed in all the time was actually illusion. I think that was the biggest hurdle actually, for people to really understand what it is. And that's also why I think there was a debate about what real Bitcoin is. Is it about store of value? Is it about money? Or is it about payments? Payments was really just a utility on top of that monetary system. And if you don't have the right foundation, then everything is just same old, same old.
Yeah, I mean, in my opinion, it's all about 21 million. I think that's the most important thing here. So you kind of addressed witnessing Goldman, at the depth of the last financial crisis, in 2008 and on. Can you talk a little bit about like the experiences that you had that kind of set you up to understand the issue? And then in 2016, when you actually gave Bitcoin some time of your day and some proper research, that it clicked, like you understood this was the problem and this is what fixes that.
Yeah. I when I was in 2008, when everything kind of came to a stop, the only thing that was active was banks. Banks were uh, suddenly, the bank executive wake up in the morning and realize that there were big holes in their balance sheet. There's assets that were said to be of certain quality and was not of that quality. And then there was the risk of bank run, which is basically trust crisis. But underlying that trust crisis is actually not only just liquidity crisis, but also a solvency crisis. Back then, there was a lot of dark blind pool. Basically, investors putting in a lot of money to invest in banks. Actually, between 2008 and 2010 was the best time ever for people to invest in bank. And obviously, that's the best time for actually people who actually have a lot of money to invest. Most of the average people don't really have that luxury, right? You were basically struggling. Only the haves have the resources to actually invest in those distressed assets. And those distressed assets were protected by government, by taxpayer money, because the OCC actually step in, the banking regulator actually step in. They provide not only TARP from the Department of Treasury, but also there was a whole mechanism where the government would actually take over the loss and there was stop loss, so that investors in the back banks only get the upside, and the downside all went to the government and the taxpayer money. So I saw a lot of that, and we actually worked on a deal, M&A deal for a bank, trying to turn around that bank and find a good buyer for them. And we were very close to closing the deal until the last day. The bank regulator came in and said, no, you're not going to do this. We're just going to flip you apart and sell it to investor, PE investor. And PE investor made a huge amount of money by investing in the bank assets in between 2008 and 2010. And 2010 and 2011 turned out to be even for public market investors, the best time ever to invest in a bank, because that's kind of from there the things going up. I think from looking back, I think what didn't make sense to me now makes sense to me, because for a free market, if you really want a free market to work, price is the most important signal, right? You need actually to have a price because there's no central planning, and everyone has to have something to look at to know how to allocate their resources. And price is that only signal that will tell everyone, every participant in the market, how to allocate the resources. But the price we're talking about now are nominal prices. It is a reflection of central bank's monetary policy. on investment banking side, either you're trading or you're in investment banking side, you have to pay attention to Fed policy changes. You have to pay attention to the yield curves. That's the only thing that matters in the market, particularly in disturbing markets. And when you do have that price distortion, companies and individuals we are all incentive-driven creatures, and we want to maximize our value, right? So as a result, it's very normal to expect all the liquidity going into the assets, hard assets, equity market, fixed income market, real estate market. And it doesn't really go into those areas where actually you need investment, the infrastructure, the manufacturing, a lot of the economy that we actually do need investment longer term, but probably don't give you the yield that you want in an environment like this. And also that division between have and have nots, us and them, is exacerbated. In 2008, when I joined Goldman, there was a weird situation where, if I went out for with friends for party, I didn't really want to say I was working for Goldman, because it felt like you were the culprit for bringing things down. Even today, we have Wall Street bets, right? Wall Street guys are really bad guys. But what I think was wrong is not like, let's not blame one side or the other. It's really the system. When the system and the incentive was set up that way, it's normal that you have organizations and people who set up a trade and pursuit incentive. And that's also what makes Bitcoin system so beautiful, because everyone is pursuing their interest, and because the system is set up right, so that everyone, when they maximize their interest, we all stand up and defend the system. And that's also what makes the system more agile. So I think that also, is very interesting. And then also, I always believe in free markets, and my educational and personal background, I was born in China. I grew up in China, in an area where, in a period where the open up policy was adopted. So I actually witnessed how, when you give people the power to pursue what they want to do, and you give the power back to the market, and reduce the power of the government, there is a lot of creativity and productivity that can be unleashed. And I lived through that, and I always believe in that. And I think that's also why, when we look at 2020, when even today, right, U.S., United States, and North America is getting into a very divided society. That us versus them rhetoric is becoming really hard to heal. And I think that there's a fundamental reason for that, because of that system. The legacy system is set up so that if you are on the wrong side of the society, you don't have resources to chase all the asset bubbles. Your minimum salary is just minimum salary, yes, probably your everyday kind of purchase, there's not much inflation, just because of all the globalization and some of the technology that's driving the deflation side. But where the social wealth really accumulates are in real estate, are in stock market, and average people just don't have the means to do that, and they don't have means to buy that. And when that kind of deepens, there is this emotional stress created between different groups of people. I think that's really hard, and also create deeper dependence on government. And I think the beauty of US is that people believe in individual sovereignty, believe in independence, right? If you want to help people, you give them tools instead of giving them cash, and increase their dependence on the government. You want to let them have education and give them tools to help earn their future. but in the wrong system, we just keep going in the wrong direction. It's really hard.
So Hong, I want to chime in. A lot to tease out there, but I want to kind of turn it. You're indicating a lot of the issues that are wrong with the current system, and maybe you're talking to someone who doesn't understand that these issues exist, or they don't see how something like Bitcoin can fill those deficits or those holes that are currently present in society. How does Bitcoin fit into this? Like, how does Bitcoin fix this? Can you explain that?
Yeah, I mean, Bitcoin is the sound monetary policy, right? When we think about what forms the foundation of the society, it's money. Money tells us what we can do. We earn money. Every one of us have our own value to create and realize. We all want to create our value and realize our value. We buy stuff, we trade stuff. That trading activity has been in our society forever, since the inception of human society. And when you have a monetary system that is controlled by individual organization or government, that takes the sovereignty out of us, out of every one of us, that monetary system is not honest, right? When the government can actually inflate the money out of your control, out of our control, it's really hard, because I earn $100 today and it will be only $80 tomorrow, and then the housing price goes up to $200. How am I going to catch up? There's no way for me to catch up on the individual side, right? So there's that have and have not division will continue to grow if you're on the wrong side. However, if the monetary system is honest, I earn $100, I can probably save a little, because I now know I can save, because I know that the money will not deflate over 10 years, over 5 years, over 20 years. I can actually save and leave something for my future, for my kids in the future, for my family in the future, without worrying about this being worse than today, right? So I don't have the need to actually spend it or find a place to put it into investment and chase yield when that yield is not really there. So I think the current when you have a more honest, sound monetary system, a money that is not going to be controlled by anyone, a money that actually can store value, and that it can, because it's coded in the system. It's being protected by not only the system, the technology, but the whole kind of collection of community consensus. And it's very predictable. Then I know I can actually, when I earn something, I can put money aside, and then I put some money aside for investment, and then I spend it. And that money, the compounding power of money can be quite powerful. So that even if I am not a billionaire, millionaire to start with, I can still make sure that my family is having a good life, and maybe I can invest wisely to make a fortune out of it. That there is just a more equal and open level field for everyone, right? And also the other thing is, when the money is not inflated intentionally by the government, then I don't have to go chase yield. Right now, when I think not only in US, but across the world, we see the problem of over financialization that starts from US, from the developed countries, and we are starting to see it in some of the other developing countries like China, right? And I think one of the debate that the people are having is why, is the symbol of being a good, developed country, is a symbol being that you are a service heavy country, and you are a financial sector heavy country, and then move manufacturing out to elsewhere. Is that the right trend? we can debate anything about it, but the thing is, when the system is built in the current way, that is an inevitable direction. People have to chase yield because we all know, I think, 2020, I think the biggest issue for everyone, as long as we all have some money sitting around there, we'll have to scratch our head and ask ourselves, where do we put the money? There's nowhere we can put the money, and rest assured that this money, $100 I put down, will still have that $100 purchasing power a year later. Nobody can say that, right? You put into real estate, we'll see. Fixed income probably not going to give you much. We're lucky that we're not paying negative interest rate. Equity market maybe, but we're talking about gambling. Equity market is a big. There's a lot of belief in the price there because equity market has always been a traditional, a very good place for people to store value when there is inflation expectation. But still, you never know, because sometime at some point reality will catch up even in equity market. So it's really hard, but people have no choice. You have to find place to put yields, to chase yield, because there is this inflation expectation. And in 2020, the inflation was 25%. The monetary M2 supply increases 25% increase. How are you going to find a investment that will increase 25% in its fundamentals? It's just hard. And when you think about people putting money into work, right, it's natural that people will divert all the resources into financial markets, because that's the only place where you can actually get a high yield overnight. In hard working area, in entrepreneurship, technology, innovation, manufacturing, there's no way you can get 25% yield within a year. It takes time. It takes a lot of investment. There's a lot of innovation will get you a lot, but there's also a possibility that you fail. So you have to weight that possibility. So it's very natural that resources go into financial institutions, go into the financial sector. It's natural that a lot of the talented people go to Wall Street, as what we've seen in US and in China. That financial over-financialization is real, right? That risk is real. It is affecting our society, productivity. But I think Bitcoin can fix it, because it takes away that anxiety for seeking yield. And then people can actually think about what they really want to invest in. Some people probably just choose to put the money aside and do what they want. Some people probably want to invest in something more longer term instead of just chasing the artificial bubbles in the market.
So it's my opinion, and maybe this is more anecdotal, but I think that most people, the average citizen, the average human, they just want cash. They just want something that they can save. My fiance's dad, he doesn't want to invest. He just wants cash that works. And I think some of the specific subjects that you touched on are things that Bitcoiners, really rally around, which is this idea of time preference, right? Like, I need yield now, or I have the capital and ability in order to invest it for the long term, like that difference in how fiat money, influences that. And the other thing is just capital allocation in general. And again, that's kind of a microcosm of time preference to some degree, but you could argue in many different ways that we don't have a way we can't have a free market without a appropriate way for individuals to allocate capital without being coerced, without some sort of untrue influence. I don't really have a question here. I'm just kind of trying to tease out some of these subjects that you're bringing up, but I really like your explanation.
Yeah, I do think that price signal is really important because, again, the current price signal that we're seeing is not real price signal. Right? It is a nominal price signal that has already worked in that inflationary nature of the money that we have. So it's really hard when we look at what, and also the calculation of KPI can be very misleading. It doesn't really include increase in the assets, in hard assets, in financial assets. But in reality, should those count? Of course they would, right? It's actually a major part of wealth. We talk about boomers, being probably a larger sector of a society having wealth, and then Gen Z and the younger generation are at the disadvantage. And why is that? Because of this system setup, right? Because the younger generation, you don't really have anything to start with, and the only way that you can earn is to work hard and get salary, or you become an entrepreneur and maybe you make something work and become rich one day. But the successful engineers is only a small portion of the population. Most people have to work hard, and it's really hard if you just work hard and try to catch up with all the asset increases when you don't have anything. You've got nothing to compound, right? the boomers, or whoever already have something, they have that compounding power of wealth is overwhelming. But as someone new into the system, you don't have anything to compound over, and the money you earn can be deflated at a rate that you cannot control. So the only thing you can do is probably go gambling or just go into the equity market, like what we've seen with Robinhood, right? That's the only way. That's the only way out. But there's now a different way. You can come actually to Bitcoin. You don't have to gamble. You just put some amount and let Bitcoin works the magic over time.
So, I mean, obviously, OKCoin offers a lot of different crypto assets, but you've made it a point to invest in Bitcoin, educate about Bitcoin, and really highlight Bitcoin's importance to someone who doesn't know much about, Bitcoin, altcoins, this ecosystem. Why would you kind of, or how would you characterize Bitcoin? Why would you say that Bitcoin is special? And yeah, I guess pass it back to you.
Yeah, I mean, Bitcoin is the digital. The way I think about it, it is the digital gold, but it's more than that. It is the digital internet money. Like when we talk about, and it is a banking system. You basically put your money in, you don't have to worry about it, and it will just help you grow. That's how I would characterize it, right? It is people talk about exit price. Actually, again, I was having this conversation with Michael Saylor the other day. I was asking him about his exit strategy for Bitcoin, and he said, "I have no exit strategy." I was like, "Yeah, that's right." And yes, people ask about what's your target price for Bitcoin, and we talk about 100,000. We talk about 1 million. We talk about how many millions become rich. But I think that ultimately the hope is that this can actually succeed as becoming the foundational layer, and we stop asking about what is the target price for Bitcoin, because at that point, Bitcoin will be the price for everything else. Sats will be the price for everything else, right? And that's why I feel pretty passionate, and we at OKCoin also feel passionate about investing in this and promoting this, and hopefully more average people can start to see this. And even if they don't fully understand, just put $100 down, and just put it there and forget about it. And maybe someday this will save you. You never know. But I do feel passionate about, I think, having more individuals coming in and democratize the distribution of it, because this is the future. It's going to be hard for our system to keep going down that path in the current system, because there's a lot of, I've been talking about change of paradigm, right? The author of Principle, he talked about change of paradigm a long time ago, even if he didn't like Bitcoin, but ultimately he actually turned around and started to say, okay, actually this probably is a alternative asset class, but it is more than that. It is.
You're talking about Ray Dalio.
Yes, yeah, Ray.
Yeah, I love that book. He's put out some great stuff.
It's a great book. I don't understand why he haven't fully opened it up yet, but I guess everyone has a process. But I do think that this is this is the way out, because if we keep going down this current path, that division is going to be deeper and deeper. And the society will be more and more reliant on government, because government has this tool, and our government, most of the governments in the world, is heavily leveraged. And I just don't see any way out of it, right? For US government, 25% GDP. Like, how are you going to get out of it? There's no way except for inflation and tax. And those two, I just don't think the government is the most efficient user of capital in the world, period. And
I think that's a fact.
only, yeah, we can only benefit when that decision is back to every individual, and we make that decision on an individual sovereign basis. And we don't go down that path of social division and even war. I think more than one people have cautioned about this change of paradigm, and we're on a very dangerous verge, and rightly so. But how can we change it without changing the foundational layer? There's just no way of doing it. And for every one of us individual, like, we probably we're not in the position to decide what comes next. But I think there is a place for every one of us to say, okay, if I want to take care of myself, take care of my family, make sure that we have the purchasing power, our hard-earned money is protected, right? And that purchasing power is protected. At least I put some money down in Bitcoin. And it's a call option, to a different future. If you're not a hard believer, it's a call option. And it can be a totally different thing if it turns out. Hopefully a much better future.
So we've gone almost 45 minutes and we haven't talked about OKCoin yet. I think this is a great place to transition into that. But before we do, would you mind explaining what a call option is to the listeners who might not know what that is from a trading perspective?
Oh, yeah, sure. A call option is that basically you pay a nominal amount upfront, and then you believe that something good will happen in the future. You pay a very nominal amount upfront. If it doesn't happen, everything you lose is that nominal amount you pay upfront. But if it does happen, actually, it's a huge payout day when it does happen. So there's a huge upside, and the very limited downside.
Gotcha. Asymmetric risk profile of buying Bitcoin is huge. And yeah, a call option is a great way to describe it.
Yeah.
So, Hong, let's transition into OKCoin. Yesterday during the clubhouse, you and your team, were describing, a different approach, an approach that is less focused on traders and more focused on helping, everyday people who are waking up to the system, waking up to Bitcoin, get exposure and onboard. Can you talk a little bit about Bitcoin adoption and OKCoin's role in that, in facilitating that?
Yeah, sure. We, as a platform, our hope is that we can play an important role to help people onboard into Bitcoin and into any other crypto assets they want to. And to do that, I think there are a couple of different important things to accomplish, right? First of all, we are not live in a crypto only world. That's just reality. And we just have to embrace that. And a lot of people don't even know what Bitcoin is and what crypto is. We are living in a world where there are central banks, there are regulators, there are a lot of regulatory requirements and compliance, and there are banking infrastructure, et cetera. And that's just reality too. So I think it's important that we embrace that reality and try to build the bridge to connect the two worlds and make it easy for people to go from one to another. And that's what we've been doing. We're building banking infrastructure, we're building payments infrastructure, adding ACH, credit cards, debit cards, and different SEPA in Europe, adding payment infrastructure in different parts of the world. So we're working on that. I think that is the number one important aspect of doing it. I'm talking about general audience, not the geeks and who only do Bitcoin by mining and setting up their own nodes, right? I'm talking about the larger population.
I'm not even
And
in that group. I mean, I set up my own node, but I can't mine for sure, and I'm definitely a buyer.
and it's about setting things up easily for people to do a recurring buy, right? I think the best way of Bitcoin is the future, but Bitcoin is very volatile because it's a growing thing, and it got to be volatile in that process. So I think for average people, including myself, there's no way to predict the market. You cannot time the market, right? So I think the best way of accumulating Bitcoin is really to do average dollar cost. You just keep buying it. You set a schedule to do it every month, every day, every week, and just like your savings account. And that's what we have been offering our customer. We do have a recurring buy that can help people stats at dip, right? Buy a dip. You don't have to you can intentionally buy a dip disproportionately, but you won't be able to know when is the dip before the dip comes. So we do have that functionality. We'll probably enhance that to really make it easy for people to use and accumulate stats. We are also actually, we're building the platform to help layer 2 solutions as well, including Lightning, so people can actually transfer Bitcoin at a lower price when the Bitcoin price keep going up. I would encourage people, when you start to get to a certain amount of Bitcoin or any other crypto assets, get your own cold wallet, custody it for yourself. So Lightning can, in Bitcoin's case, can help reduce that transaction fee for a small amount. I know that some people would like to continue to buy a small amount and immediately transfer it out, which is totally fine. So we're enabling that. We have STX listed Stacks, which is a second layer protocol, trying to build smart contract on top of Bitcoin. And the interesting thing that they do is that they allow people to stack their STX and earn Bitcoin. And again, that's a great way of stacking Bitcoin. And I do that myself as well. Not to promote that, but I think it's a great thing to do, right? You put stacks in there, help them build the protocol, build the layer while you earn Bitcoin yourself. I think that's great. So we're trying to do different things to try to kind of help people understand, help people earn some yields, help people accumulate a little bit more stats before this kind of more people, more institutions come in. It's great to see all the companies buying Bitcoin, all the institutions buying Bitcoin. But my concern is that if that happens too quick, this will be too much for average people to afford. And I would rather have more people coming in now or as soon as possible before it goes up too fast.
Yeah, the people need to front run the institutions, and Bitcoin's probably the first chance in history for them to do so.
A lot of people do, right? They have, and we just need to encourage what I think you guys are doing a great job promoting Bitcoin, and a lot of other podcasters are doing that as well. It's important that educational and marketing efforts are important to let everyone, individuals, get to know about this and be educated. Again, I think the education is the biggest hurdle. It is the biggest hurdle, but once you cross that chasm, you know what's happening, and you start a lot of people just fall down into the rabbit hole, right? That's the beauty of it.
And that's the kind of colloquial terminology as well, just because there's so much to it. Like, Bitcoin is deep. I think a lot of people who haven't looked at Bitcoin don't realize how deep Bitcoin is. Hong, this is my last question for you, but I kind of want to circle back to this idea of, Bitcoin is fixing a broken system. And I'm curious what your perspective is on what a Bitcoin future looks like. And I know that's a pretty big question, but I feel like you've kind of been hinting at it a little bit. And I can imagine you have a vision in your head of a fairer future that you're building towards.
Yeah, I think I like talking about future, because I think that's what drives us, most of us here, right? We are here because we believe in something, and we're passionate about doing something that is actually not tangentially changing things, but really reinventing, rewire the whole society, the whole system, and giving everyone a new start, and fixing everything. And I do see that a lot of people use, okay, Bitcoin fix this, Bitcoin fix this, Bitcoin fixes everything. I don't think Bitcoin can fix everything, but it can fix a lot of the fundamental questions, the problems we have in the system. And I think in the future, there can be two. I don't know. There can be two different versions of Bitcoin future. The best ideal version of Bitcoin future is that you have this Bitcoin layer on the bottom. Everything that we see today in society, in financial system, in kind of the internet is built on top of it, and every other different nowadays we have companies, right? Twitter, Facebook, Google. In the future, and we have governments, we have countries. In the future, there are no companies, there are no governments, countries. It's just token economies building on top of it, and each one of them have interoperability with each other and with Bitcoin, so that every one of that token, utility token whatsoever that is priced in Bitcoin, in sats. And we all earn what we contribute. There is certain sort of proof of work that happens there. That I think that is kind of the optimal long-term future that may happen. But there's a long way to go there. So I think there may be different shades of future, and probably a more realistic future, not totally ideal, but we'll see. Is that the Bitcoin layer is still there, monetary layer is still there. We probably don't have that technological breakthrough to be able to rebuild everything on top of it, but maybe some of our society on top of it. And that part, including there may be some legacy fiat part on top of it too, but fiat will be pegged to Bitcoin, be expressed into Bitcoin. And then people can actually see which government, which is central bank is more disciplined, and that will be very quickly reflected in their relative price to sats. And governments will have to become more disciplined, because otherwise people can vote with their feet, people can vote with their money. And I think that's a good thing, right? And that's ultimately what we want. We want to have a more disciplinary system in place, so that the resources can actually be allocated and used by those who are most efficient in using them, not by the big central allocator that will continue to grow and grow and grow. They don't even know how to put their own house in place and have a lot of the deficit out there. And they talk about each one of us being scored on a credit card. So I think there's that potential future. And obviously there's another side of the future, which I think we're probably trying to stay away from, which is the worst case of two worlds, where you have censorship, all transparency on chain, all the digital money on chain, and then still central planning for monetary. So hopefully that doesn't happen, but hopefully the other two versions somehow happens down the road.
Yeah, we'll definitely want to avoid some sort of like complete dominance of central bank digital currencies. Blockchain tech can, it's a tool for mass surveillance, having this transparent ledger. But used if it's used incorrectly, if it's used by central planners, it can be very powerful for them. But it also enables free market money backed by incentives and backed by, in Bitcoin's case, proof of work and other aspects of the actual network. Hong, this was a really great conversation. Once again, I really love how you kind of explained and tease out these complex things that are happening within our society, within the global economy. And I'm really glad that you're leading OKCoin. So
Thank
I
you,
guess
Christian.
just to close out the conversation, want to give you an opportunity to give your last word to the audience and plug where people can find you.
Sure. Yeah, I think we are living in a very interesting time. It's a once in a lifetime opportunity, right, for us to work together. And what is beautiful about Bitcoin is that this is a community movement, and I think for every one of us, we need to do our own ourselves a kind of service by educating ourselves, and even for every one of us, for myself included, I have still a lot to learn about Bitcoin. And I think that's the beauty of the community. A lot of people are very passionate about it and they want to share their knowledge about this. So let's continue doing this, and I would love to be able to lead our platform OKCoin to really help and contribute in that journey. And thank you everyone for your support. And you can find me on Twitter at HFANGCA, and my DM is open. Thank you.
Awesome. Well, again, thank you so much for the amazing work translating Bitcoin, making it available to all of the audience. Go check out Hong on Twitter. Go check her out on Clubhouse. I'm sure she's going to continue to spread knowledge there. And go check her out on the Bitcoin Magazine podcast. So I know you may be watching this on Twitter. You may be watching this on YouTube. Go subscribe to the Bitcoin Magazine podcast. Give us those 5-star reviews. And yeah, share this podcast out. I think it was a really great one. Peace.
Peace.